Picture this for a second. You're 20 years old, it's 5 minutes before New York Open, and your entire world is squeezed onto 2 TradingView charts and a tiny level 2 window. ES is coiled just under yesterday's high. NQ already whipped out both sides of the Asian range, and a clean 1-minute liquidity sweep is printing right at the zone you marked last night. You've got your position size calculated, stop loss ready, risk set to 1R. Your cursor is literally hovering over the buy button. Your heart is pounding like you just hit queue up in a ranked game. You can feel the dopamine starting to rise just from imagining the green P&L. At the same time, cortisol is spiking because your brain still remembers the last time you took this exact setup, and it instantly tagged your stop. Your hands sweat, your breathing goes shallow. Your pre-market plan suddenly feels too simple for a real market. So you stall, you zoom out, add another indicator, redraw the same support line for the 4th time, as if straighter lines mean safer trades. 10 seconds later, the candle launches without you. That was my life at 18 and 19. For this story, let's call that younger trader Marcus, the scalp master version of me who thought more trades meant more edge. I wasn't a profitable day trader. I was a full-time spectator with a funded account. I'd either freeze on A setups or slam market order on absolute trash because my brain wanted the dopamine hit of doing something more than it wanted clean execution. Most traders lose money, and back then I was proudly contributing. This video is not financial advice. I'm not telling you to copy what I do, and past patterns don't guarantee future results. I just want to show you exactly how my thinking had to change so I could stop sabotaging myself and finally become consistently profitable while I was still 20. When I say profitable, I don't mean Lamborghini Instagram profitable. I mean boring, spreadsheet-verified, month-over-month profitable. Small daily R targets, capped drawdowns, no more blowing up because I tilted after one bad trade. The journey from gambling teenager to disciplined day trader had almost nothing to do with finding the perfect indicator, and everything to do with rewiring how my brain responded to candlesticks, risk, and uncertainty. At first, my edge was pure illusion. I had chart pattern hallucination on every time frame. I'd stare at EURUSD or NASDAQ, and my brain would auto-complete head and shoulders, flags, whatever I needed to justify the trade I emotionally wanted. Then I'd do the classic, move my stop loss lower, just to give it some room, add to the loser because it can't go much further, and watch a tiny planned risk turn into a full-day account punch. That's straight out of Mark Douglas's world, using beliefs built for normal life inside a completely unstructured environment where the market has zero obligation to behave the way you think it should. Douglas, Mark, the disciplined. In normal life, more effort usually equals better results. Study harder, get better grades, work more hours, earn more money. My early trading brain tried to apply the same rule. More analysis equals better trades. So when price reached my level, I'd add more indicators, read more news, check more Discord opinions. By the time I had enough confirmation, the move was half over. It took Brett Steenbarger's work to slap me in the face with a different reality. Markets reward the trader who has processes, not the one who simply works harder. The pros he coached weren't staring more. They were reviewing better, adapting faster, and treating their trading like a performance craft. Trading psychology tuntu and to know. From best. So I did something most 19-year-olds don't want to do. I admitted I wasn't special. My brain was running exactly the same default code as every other new trader. Revenge trading loop after a loss? Check. Overtrading compulsion after a big win because dopamine wanted another fix? Double check. I'd finish a green morning, and by the afternoon, my P&L curve looked like a cardiogram. Steenbarger calls this out directly. A lot of losing traders aren't trading the market at all. They're trading their unmet emotional needs for excitement, self-esteem, and validation. 2. Brett Steenbarger. Psychologue. That was me. The turning point wasn't one big win. It was one horrible day. I'd strung together 3 solid green days on ES scalps. Tiny size, clean 1-minute setups, fixed stop loss, partials at 1 and 2R, and done for the session. On day 4, I came in feeling invincible. My first trade lost. Instead of following my plan and waiting for the next A setup, I felt this burning need to get it back. Adrenaline hit. My vision literally tunneled. My cursor started hovering permanently over the buy and sell buttons because my nervous system needed action more than it needed edge. I tripled size on the next trade. No clear setup, no proper liquidity sweep. Just prices moving, I'm not in, I'm missing it. The market immediately smacked me. Within 20 minutes, I had given back the 3 green days and then more. I broke my daily max loss, removed my stop entirely on one position, and watched my P&L freefall while my brain whispered, "It has to bounce." It did not have to bounce. That night, I finally stopped looking for a holy grail strategy and asked the question Mark Douglas forces into your skull. If the market is completely neutral and random from my perspective, what's the common factor in all my results? The answer was disgusting and simple. It was me. I was the pattern. My emotions were the system. And that system had a negative expectancy. The next morning, I made a decision that felt like giving up trading, but it was actually the moment I started becoming a trader. I stripped my charts naked. No RSI, no stochastic, no rainbow moving averages. Just price. Yesterday's high and low, session levels, and volume. I cut my size down to the absolute minimum where wins and losses felt like a tap, not a punch. For 2 weeks, I was not allowed to take any live trades that weren't first rehearsed in replay. I treated it like the train to failure idea Steenbarger talks about from strength training. You deliberately push your mind to the edge in practice so it adapts under stress. 2. Brett Steenbarger. Psycholo. Then I built a tiny mechanical box around my wild brain, my scalp master rules. 1. I only trade the first 2 and last 2 hours of my session. No midday chop boredom trades. 2. I only take a setup if I can explain in one sentence why liquidity is trapped and where my stop proves that idea wrong. 3. Fixed risk per trade. 1 R per idea, never adding size once I'm in. 4. Maximum 3 trades per session. If I hit my daily max loss, platform locked. I literally had a browser blocker to stop me from logging back in. These weren't goals, they were code. The market doesn't care how badly I want to make a certain amount this week, but my platform absolutely cares if I can't physically place order number 4. Risk management stopped being a suggestion and became survival. But rules alone don't rewire a brain. This is where the neuroscience layer kicked in for me. I had to accept that I was addicted to the dopamine spikes of random big wins. My best feeling trades were usually my worst statistical trades. They were late FOMO entries, size increases after a loss, or random impulse scalps during news candles. My nervous system loved them because they were intense. My account hated them because they were chaos. So I started deliberately training my brain to crave different chemicals. Before the session, I'd do a 2-minute breathing drill just to get my heart rate down and bring my prefrontal cortex back online. After each trade, win or loss, I forced myself to write 3 quick lines in my journal. Setup, execution, emotion. When I followed my plan perfectly on a loser, I literally celebrated it out loud. Not performatively, but to send my brain a new association. You get the serotonin hit of pride and calm when you execute, not when you happen to win. From the disciplined trader, I stole a brutal idea. The market has 0 power over me. The only thing it gives me is information. My pain comes from the gap between what I expect and what it actually does. Douglas, Mark, the disciplined. That meant every time I felt that cortisol spike of this trade must work, I reminded myself, no, it doesn't. My only job is to express my edge and cut the trade when the information proves me wrong. Here's the paradox no one tells you when you're scrolling trading Instagram. The more I accepted losing trades as ordinary business expenses, the less I experienced catastrophic losing days. The more I respected my stop loss, the less often it got hit. The tighter I tried to make my stop to improve risk reward, the more the market would tap it and then run in my direction without me. The setups that made me the most money almost always felt the worst in the moment. Taking longs when Twitter was screaming doom, shorting into euphoric green candles, entering when my emotional brain was begging me to wait for just a bit more confirmation. The more comfortable I felt in a trade, the more likely it was just my brain chasing dopamine, not my process reading order flow. I also had to accept another uncomfortable paradox straight out of trading in the zone. You don't have to know what's going to happen next to make money. You just need a probabilistic edge and the discipline to let that edge play out over a series of trades. Once I truly swallowed that, every single trade shrank in emotional importance. It was 1 of 100, one data point in a distribution, not a referendum on my intelligence or future. That mental shift is exactly what Douglas means when he talks about self-trust and operating without fear. Douglas, Mark, the disciplined. Slowly, my days started to look different. Instead of staring at the P&L, I watched the auction. I listened to the market like an order flow language, not a scoreboard. I'd see ES sweep a prior high on a spike in volume, stall, then flip order flow as sellers defended. That was my short setup. 1 sentence, 1 entry, 1 stop. If it went, great. If it didn't, I was out at -1R and free to focus on the next sequence. No moving the stop, no adding size, no revenge pressing buttons because my ego was hurt. In my journal, patterns emerged. I made most of my money in the first 90 minutes and the last hour. I gave most of it back when I traded in the middle. So I stopped trading the middle. I noticed my win rate dropped sharply after my 3rd trade of the day. So I capped myself at 3. That's pure Steenbarger. Using data from your own performance as a lab. Building best practices into repeatable processes. Trading i psychology dati konverti to from best. Verify environment. By the time I turned 20, I had a full year of tracked trades. Same intraday market focus, same few setups, same risk per trade. My equity curve was no longer a roller coaster. It was a choppy staircase. Green month, tiny red month, bigger green month, flat month, green month. No more massive drawdowns, no more blowing accounts, just slow, boring compounding of skill and capital. Here's what that actually feels like in the moment. Most mornings are not exciting. I watch price rotate between levels and do nothing. I let other people play hero on news spikes while I sip coffee and wait for trapped traders to show their cards. My dopamine hits now come from following my rules on a messy day, not from smashing 10R on a random CPI candle. Cortisol spikes still happen. I'm human. But I know what they are now. Body alarms, not trading signals. I feel the adrenaline when I'm about to press buy, and I use it as a cue to check my rules, not to rush my entry. Do I still break rules? Sometimes. But now I catch it quickly because I've built a habit of self-observation. When I overtrade, I don't blame the market or the algos. I go back through my day like a coach reviewing game tape. Where did my state shift? What thought did I believe right before I broke the rule? What will I do differently next time that specific emotional pattern shows up? That's the final layer most people skip. Becoming a profitable day trader at 20 wasn't just about finding an edge in the ES or NASDAQ candlesticks. It was about finding an edge in myself. Adapting, like Steenbarger describes, isn't a one-time event. It's a process of constantly updating how you trade, as both the market and your own psychology evolve. Trading Psychology 2.0 from Best. So if you're watching this as a new trader, here's the real takeaway from my story. You don't need to be a genius. You don't need to predict every move. You don't need 10 indicators or 7 monitors. You need 1 or 2 simple setups you genuinely understand, a risk plan that keeps you alive when they fail, and the willingness to treat your brain like part of the system. Most traders lose money because they never make that shift. They keep trying to fix the chart instead of fixing the operator. And again, none of this is financial advice. You can do everything I described and still lose money if you ignore risk or trade products you don't understand. Day trading is dangerous. Margin amplifies everything, up and down. Risk management isn't sexy, but it is survival. The only reason I'm still here, still trading, still stacking boring green months at 20, is because I finally respect